How's it going, fam? It's been a crazy week. We've been having ups and downs on your USD. We've been ranging for quite some time, and that is why I'm doing this video, because I want you guys to see the overall perspective that I'm looking at right now on my bias on your USD, because you could be looking for a major swing. So with that being said, guys, let's get straight to it. Now, before we get into this, let me just go ahead and put my glasses on real quick because I don't want to mess up my eyes. Now, as we can see, we've been overall bearish. We have our previous structural levels right here. So we have our previous high. As we can see, we have our previous high and previous low before this expansion move. Now, as we go ahead and approach, understand that we're still bearish, right? In the overall direction, we're still bearish. However, we have been breaking some minor structure levels, as this right here. This is going to be a minor structure level on the daily time frame that we had broken. So that is why I'm going to be taking it very easy as far as like me not wanting to take it all the way down. Instead, I'm just going to go ahead and want to rebalance the market. Instead, I'm just going to want to go ahead and take my trade to a rebalanced area. In this case, somewhere around this area. Okay, but I'm going to go ahead and break it down for you guys so that you guys can see exactly what it is that I'm looking at. Now that we have been able to see that we have our expansion, where are we currently at right now? We can identify that this right here is a accumulation of price. Accumulation of price is something that I pay a lot of attention to, as you guys may know. And also, we are ranging within a major level right here. A thing that I want you guys to look into right now is going to be this level right here. This level is going to be a quarter theory level that I was looking into for market to potentially come down into. However, ideally, I wanted market to come into the section around London session. It came up into that area a little bit sooner, but we can go ahead and adapt. Going into the 4-hour time frame, okay? As we go into the 4-hour time frame, why is market reacting from here, and why do I anticipate for market to react from here for it to continue going lower? Okay, we need to be able to be open with our overall direction. We need to be able to understand why would it react, and in case if it doesn't react, what would I expect after? In this case scenario, the reason why it would react is for the following. As you can see, there is an imbalance right here. And right underneath that imbalance, we have these nice equal highs that we were able to go ahead and take out. So seeing it from an institutional perspective, we have been able to take out liquidity coming into an area that has been attractive for the market as far as the imbalance zone. And therefore, we can anticipate for market to potentially continue on moving further down. Now, could we go ahead and target these lows over here where we have this wick? Yes, we could. In this case scenario, now that we understand that it's reacting from a 4-hour time frame, I'm going to go over to a lower time frame, which is going to be, in this case, the 1-hour time frame and the 15-minute time frame. As we approach the 1-hour time frame, what are catalysts that I'm waiting for? Well, first off is I want to see if market can go ahead and have a break, structural break, and even better if we can have a directional break. What I mean by a directional break is once market has a single move breaking two structural levels for a potential retracement to a continuation to the downside. Now that is something that would be ideal for me to identify. Going into the 15-minute time frame, there are certain reasons why I like to take market down further, right, into these areas right now, which is going to be potentially London session today or New York session tomorrow. One of the main reasons is because we can see that we have lots and lots of liquidity right in this section. It's going to be an area where we can understand that trend lines typically are created for them to be destroyed in the near future, and they're created also because order flow is falling. We can see how market goes up, taps into order flow, market goes up, taps into order flow, market goes up, taps into order flow, so on and so on and so on. So once we break this structural area right here and this one, we'd be changing order flow from bullish to bearish on the lower time frame, such as the 15-minute time frame. And that is why I would like to see market continue on moving down somewhere around these areas, which is going to be around the 1.10550 level. Those would be the areas that I personally would be looking to target first before looking to target anything further down. And the reason why is because I want to be able to understand that we could be looking for potential moves down and then retracements for a continuation or an expansion. So I want to be able to be prepared for whatever the market provides, because understand that capital preservation is key when it comes to trading. So with that being said, guys, I hope you guys enjoy this video. As always, please do me a favor and go ahead and smash that like button, because last time I got comments from YouTube that the algorithm wasn't working. So if you guys can just help me out with that, I'd really appreciate it, and I'll go ahead and knock out more videos like these for you guys to look into the near future. You guys have a wonderful rest of your day, and I'll see you guys next time. Bye bye.